Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk, and welcome to this morning's market update on Friday the 24th of April. So prices yesterday ended up largely flat across the day following the soft opening as the line pack switched to short, and there was some support from bullish oil markets as well. This morning prices have opened up a little bit softer on the front of the curve, but most of the seasons are looking like they'll open fairly flat again today. The key drivers today to be aware of: opening line pack forecasts are around 12 MCM long at the moment, supported by suppressed demand. We've also got a new temperature forecast for the next 30 days, suggesting next week will actually be even cooler than expected. And finally, oil markets continue to be supported by the conflict in Yemen and a weak dollar. So those are the main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So looking at the gas system in a bit more detail to start with, as I mentioned, we've got a 12 MCM long position forecast at the moment. That's largely helped by the lower demand levels today at around 188 MCM. That's over 10 MCM less than seasonal normal levels, as temperatures are still a couple of degrees above seasonal normal today. Those temperatures will dip into the weekend, and through next week expected to be around about 3.5 degrees lower than seasonal norm, pushing the demand forecasts probably about 40 MCM higher than they are today. So expect a bit of tightness there, albeit the Norwegian maintenance is scheduled to start ramping down a little bit from the 29th of April, so midweek. But we may continue to see the strong exports through the interconnectors, which are currently around 45 MCM today. Elsewhere, LNG supply is pretty flat across the week, still around 30 MCM today. But as mentioned, there's about 3 cargoes expected to South Hook this weekend, so we may see better send out next week. There's a little bit of storage nomination as well today, so that's helping to produce this long line pack position. Looking at the power system quickly, it's pretty similar to how it's been most of the week really. Peak margins up near 16 gigawatts, wind still pretty low, PV embedded generation has kind of come down a little bit over the last day or two, but in terms of the wind we might see that pick up from current levels at around 0.5 gigawatt today to over 3 gigawatts tomorrow. So that might actually reduce some of the CCGT call on gas and maybe provide a bit of storage injection opportunity. Looking a bit further ahead, there's not been too much change in the outage forecast on the power generation side, but it's always worth remembering this winter is forecast to be the tightest in terms of peak margins in recent history, so any unplanned outages really important to look out for, which as they may spike the winter 15 prices. Looking finally at the oil markets, as I mentioned, it continues to be supported by the conflict in Yemen, where the Saudis have continued their airstrikes despite saying on Tuesday that the threat had been removed. We've also seen support coming from the weak dollar, with continued poor data coming out of the US. In the foreign exchange markets today, we've already seen some strength for the pound against the euro, helping put some pressure on those gas prices. That's ahead of the Eurogroup meeting today, where time is running out for Greece really in terms of doing a deal. Today was expected to be the deadline, but analysts aren't expecting anything to be completed today, with still some wide differences over the levels of reform that Greece is proposing. That's it for today. Have a great day and enjoy your weekend.